By the Department of Business Oversight under the California Residential Mortgage Lender Act, NMLS ID 237926. Also licensed in Arizona 0941504, Florida 76508, Georgia 69178, Illinois 031.0058339, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington 237926. ID cycle points DBO 1666881, Arizona 101648.
She's a mortgage mom. She can get things done. When you're in need and don't know where to go, pick up the phone and call Mom.
All right. Welcome to Mortgage Mom Radio. I'm Debbie Marcoux, and I have got a special guest with me today. This is Cindy Russon, and she is with my team. She is one of our mortgage moms. How you doing, Cindy?
I'm doing good. How are you?
I'm good. So Cindy's never been on the show before, but there are some of you out there that have worked with Cindy, so I thought it would be good to bring her on and be part of the show, and you guys get to be able to put a face with the voice. And but Cindy, you started with me, so this is kind of our catching up with mom time. We do this at the beginning of the show. Then we'll get into the workshop. Then we'll talk a little shop.
Okay.
And then we're done, right?
All
Pretty
right.
easy. So, but you started with me. When was it? I feel like we're like at a year. I feel like I'm supposed to be doing like a congratulatory, it's been a year anniversary kind of thing. Do you remember?
Yeah, I think it's been right out a year, last March, and then we shut down with COVID.
That's right. That's right. You were in for like a week or a day or something crazy. And then it was like, everybody go home. See you later. And you're like, I just got started. I don't know what I'm doing. I need to learn this computer system. And I'm like, call me.
But we did it.
We did it. And so what is up with you? This is catching up with mom time. Like, you've never been on the show, but usually I'll ask, Heidi, like, how's your week been? What do you got going on? So what is the newest with you? Are you kids back to school yet?
Yeah, my kids are back in a couple hours a day, looking into some summer camps for them and just trying to get out there and get some more business going and get the world spinning again.
Right. So the kids are back to school, but full time?
No, 2.5 hours a day.
Right.
That's all we get.
What is up with that, right? I just send them back to school or don't. So here's my son. He's in high school, goes back to school. He's got 3 kids in one class, and he's got 7 kids in the other class.
I heard of another school where the dad sent his kid in. His kid was the only kid in the class.
Right. And
Foolish.
The whole reason we're sending them back is because they need that socialization, right?
Yeah.
So either send them or don't. I don't know. It's so frustrating. But I did see a big thing today. I was reading through it that by June 15th, I think, the governor said he was going to
California is going to be fully reopened.
Right.
California's economy is going to be fully reopened June 15th.
Right. So they're going to let our free flags fly, right?
I guess so. I don't know if calling it the economy differentiates between like schools and stuff, though, right?
Yeah, but I mean, by
does that
June
mean
15th, the
business?
kids are out of school anyway,
that's
right?
true.
Yeah,
So
right after school ends.
Right. So I don't know, but looking forward to it. And I'm sure you are. I mean, you've been dealing now for a year with kids at home, trying to do schooling, trying to work, trying to, keep things rolling. And it's hard.
Yeah, 2 little kids too. I mean, Bo was 6 and River was 5.
Yeah.
So 2 tiny ones, and then just handling them and trying to work at the same time, telling people, hey, if you hear my kid in the background, sorry.
Right? So sorry. And the kids are screaming and the dog is barking. And,
Yeah.
that's why I actually rented a house to work from. I'm like, I can't work from home, but I can't work from the job, so I got to go somewhere. I got kicked out of my neighborhood for trying to work from my RV in the front of my house because I'm in an HOA and they don't like that idea. But I'm like, I can't not get work done at home. It is impossible.
Yep.
So yeah, I feel for you, girl. I really do. And I'm so happy that it's coming to an end here and so happy that you're back. We're doing this in person.
Yes, definitely. Me
right?
too.
Yeah. So for all you guys out there that are listening, this is Mortgage Mom Radio. What do? We bring you guys all the education and advice that you need around real estate and finance. My saying is, Mortgage Mom Radio is where your family and future comes first. So we're going to educate you. We're going to bring you the information that you need. We want to make sure that you guys understand your transaction. We're not going to even start a loan if it doesn't make sense for you. There are many, many times that both Cindy and myself and everyone else on the team will tell somebody, this is not the time. Don't do it. It's not needed. you're not going to save enough. You're not ready for that refinance, or maybe for the purchase. You know what? If you can just get your credit score 10 points higher and be a little bit patient, we can get you into a conventional loan instead of an FHA loan. And, those are the things that we're trying to bring to you to make sure that we're getting you set up, your family, and your future first. So keep that in mind. And if you guys need us, give us a call. It's 844-935-3634. That's 844 We Lend for You. That is LEND and the number 4. We've got our podcast. Every episode we've done is on podcast. Anywhere you like to listen to podcasts, you can hear us. All you've got to do is search for Mortgage Mom Radio. YouTube, every Wednesday, we are live at 5, and we are bringing you guys a new show. So if you are listening on a weekend and it is not it's not Wednesday and it is 5 Pacific time, I want to make sure that's very clear. 5 Pacific time, because we actually have new radio stations that are coming in other states that might be on different time zones. So we are live at 5 Pacific time every single Wednesday on YouTube. And so make sure, if you guys have not already, you subscribe to our channel and you turn on that notification bell so you do know when we upload a new show. We are going to do a Homebuyer Workshop, me and Cindy, here in a couple of minutes. We're going to be talking about the difference between a pre-approval and a pre-qualification, and then how do you get that started. So this is just one of the next pieces of the ongoing workshop we've been doing since the beginning of the year. Last week, you guys heard all about bank statement programs, and all of the weeks before, we've done all of the different loan programs. So if you want to learn more about VA, FHA, conventional, USDA, jumbo, just go to the Homebuyer Workshop 2021 on our YouTube channel. It is a playlist, and start at the beginning, binge watch them, learn what we're talking about, understand the process, be more educated, and it's going to be a lot more fun and a lot less stressful. That is for sure, right?
No stress is always better.
Always, yes. And if you understand, if you're not, I've even got the very first workshop is buzzwords. What do these words mean? What is escrow in your payment? What is escrow company, right?
And people appreciate it so much.
Yeah, absolutely. So that is all there for you guys. If you like what we're doing for you, please give us the thumbs up and let us know. It'd be a great time right now to like the video as you're watching. But another one that's really, really big, I want to tell you guys, it is not one that we did live. It's one that I did pre-record, and it's closing costs, and there are 2 episodes for that, and those are going to be any day now, if not already. I've got Matt working on them, uploaded to our Homebuyer Workshop 2021 playlist. So closing costs is a big deal. A lot of people get very confused by them. They don't know how much to expect. They don't know why they're paying those fees. They don't know what those fees are for. They don't know who's taking their money and why.
Why is it so much?
Why
I
is
don't
this?
understand. Break it down for me, please, someone.
Right.
Yeah.
Or that poor veteran's like, I thought I had a 0 down loan. And it's like, you do, but you have closing costs. So it's really, really important for you guys to understand that, but a little bit too boring to actually put in a live show or go out to radio to air. Imagine, you're driving in the car and you're trying to understand what the heck I'm talking about in a PowerPoint presentation on our YouTube channel. So if you guys do want to watch that, it is very, very insightful, very helpful for you, and it is there. So please go to YouTube, search for Mortgage Mom Radio. You'll find the channel and go to the workshop series. If it is not uploaded yet, like I said, Matt is working on it. He's going as fast as he can to get these out for you guys. Just make sure you subscribe to the channel and turn on the notification bell, so when he does upload it, it's there and you guys can go back and watch it. So I don't know about you, but are you ready to get going with this presentation?
Yeah, let's get going.
You ready? Let's do it. All right. So Matt, tell me when I'm okay to press forward.
Okay, yep, you should be all set now.
All right, here. Well,
You want to try it first?
Yeah, we have some PowerPoint issues. There it is. Look at that. We got it first time. First time out. It only took a step. What is this unit? We're in unit number, what are we, 9, 10?
10 or 11. I can't remember
10 or
now
11.
which
We're
one.
11. This is unit 11. So it only took us 11 units to get this PowerPoint piece down. And probably the next time that we do one, next week, it will be wrong. So that's okay.
As long as this one's right.
Right, exactly.
We're good today.
Exactly. So what's the best way to contact us? Well, you guys download the phone app. It is really all of the best information you can have at your fingertips. It's got the calculators in there that are going to run the payments for you for conventional, FHA, USDA, and what did I say? Conventional, FHA, VA. I knew I was missing one. VA and USDA. And what's cool about it is that it's going to throw the funding fee in if it's a VA loan. It's going to throw in the mortgage insurance if it's an FHA loan or a conventional with less than 20% down. So it's really a very cool calculator to have. From the phone app, you can contact us. So you can send me an email. You can ask me questions. You can call Cindy. You can email Cindy. You can contact just about anybody on the team. And then you can actually apply for your loan right through the phone app. You can listen to the podcast right through the phone app. So tons and tons of tools right at your fingertips, and it's awesome if you're out there looking for a home and trying to buy a property. So get the phone app, text the word mom to 36260.
And how nice is that for someone to be able to put in different purchase prices and learn what their payments are?
Yeah.
Instead of having to call each time and say, hey, $5,000 more, $5,000 more.
Right.
It's right there.
Oh,
Awesome.
yeah.
I love it.
Oh, yeah. No, it's honestly, I get emails all the time where somebody will ask me, can you give me a monthly payment at 400, 410, 420, 430, 440,
Yep.
450? Because they're wanting to try to budget, and I can totally get that. But it's easier for me to text them back and say, download my phone app. Click on the little phone in my email signature. Download the phone app. Because that way I can tell them you need 1.25% for those property taxes, for your homeowner's insurance based on whatever number that we talked about. For their sales price, I'll say put in $1,200 for your insurance, and then use a 3.5% for the interest rate, whatever the program is that they're doing, whatever the numbers are that make sense, and then they can just play with that thing as many times as they want. And I'll tell you what's really cool too. I've actually shopped for cars, and you can change it from 30 years to 15 to 20 to 5.
You use it for your car shopping?
I use it for my car shopping. I want to know what I'm going to be paying for that car. So it's a pretty cool little thing. If you don't have it, text the word mom to 36260 and get it. You're going to get a link. All you got to do is click on it and save it to your home screen. So we do have our Facebook going. We've been really, really bad about keeping up on our Instagram page. So it is there, but you're not going to see anything new. Our Facebook page is very up to date. So you guys can follow us there if you do like Facebook, if that's your thing. Obviously, YouTube, we're doing these shows live at 5 every Wednesday, and then we're uploading our workshops to YouTube as well. So this is probably where we are the most active. So follow us there. You can always call us. It's 844-935-3634. And hey, if you guys like the education that we're giving you, or you've worked with us in the past and you really enjoyed your experience and you felt that it was great, the best thing you could possibly do for us is give us a review. Please go to Google, go to Yelp, give us a review, read the reviews. If you're thinking about maybe giving us a call, read the reviews that are there, see if you feel like we're maybe a fit for you. But if you are getting this education and you're enjoying it, we're not charging you for it, give us a call, get on the books, we'll do a free consultation with you, and give us a review. We'd absolutely love that. We really appreciate it. If you can help us, we'll help you.
Always.
Right, exactly. All right, so here we go. All right, so we've brought you through the Homebuyer Workshop so far. I started at buzzwords. What does this mean? That's fun. Then we moved on to what is a VA loan, an FHA loan. We did conventional loan. We did USDA. We did jumbo. We did bank statements. So now that you understand what each of the loan programs are, we actually did one that said what are the documents that you would need to approve, approved for the loan, but we'll roll through that again today. But now you guys are ready, right? You know what loan program it is. You're ready to jump in. You're ready to get yourself pre-approved. So what is the difference between a pre-approval and a pre-qualification? So Cindy, I'm going to let you talk about that one because I'm sure you get that a lot, right?
Oh, all the time. And people don't understand when they're actually out shopping, they need a pre-approval.
Right.
And in order to get their pre-approval, you have to get pre-qualified first, which means you need to come and discuss it with a loan officer and go over your credit score, how much money you have down, all the little aspects that go into a loan. So when you get pre-qualified, it's just our opinion on the loan. If you get pre-approved, it's the underwriter's decision and a commitment to lend.
Right. So the cool thing is that, we're different, right? As a team, number one, we're not even going to get you a pre-qualification letter unless we have actually gathered everything from you. We want to know your income. We want to pull your credit report. We want to figure out your debt to income ratio. We want to figure all that stuff out. We want to know that you've got the money to close. If you don't have the money, you're getting a gift. Where's it coming from? Show us the goods. And at that point in time, by the time that we literally have everything, then we can go ahead. We've already got it all. So why would we stop there?
Yeah.
right? Why if we've already collected it from you and we're saying, hey, we're going to give you our pre-qualification, why would we stop there? We might as well just move it on forward and, get it reviewed and get that pre-approval letter out to that person. So it really does mean it is a big difference, pre-qualified versus pre-approved. If you have a pre-approval letter from a lender who did not gather the documents from you, they did not look at your pay stub, you filled out an application online, you told them how much money that you make, you told them how much money that you have available for down payment, that is not a pre-approval at all. Not even close. So you want to make sure that you guys are going the extra mile. So what is a Mortgage Mom Radio pre-approval? And I get this a lot. I'm like, why people call, they get on the calendar and they talk to us, right?
Yeah.
And we've got this, we've got our calendar, and we make them actually book an appointment, and we do it for an hour long. And they wonder why. They call in and they want to talk to somebody right away. And Matt's like, no, you've got to book a schedule. And we've actually had people hang up on them. We've had people get aggravated and irritated because they have to wait for a calendar event, right? They have to wait for an appointment. Why do we do that? Well, we do it because we want to take the time with you. We need to put an hour aside that is you only. It doesn't matter if there's other phones ringing. It doesn't matter if there's other emails coming in. You are our attention. That you're getting our attention. It is you and you only. So we're going to talk about your budget. Together, we're going to figure out what is the best program for you. We're going to talk about what is your income, how much do you have available for down payment. What are some of the questions that you ask when you've got somebody on the phone and you're kind of taking them through that initial consult?
Well, we need to figure out where their money to close is coming from, if they have any money to close. So then we can discuss if we're good on that, get their assets verified. But we also need to discuss their credit. Do you have a bankruptcy? Do you have judgments? Do you have child support back due on there? All the important things that may not seem that important can come back and be something you got to pay at the end. So that's just something that you always watch for too. There's so many aspects of things we watch for, but that's one.
Right, exactly. No, there's and it's one of those things where we just need to be able to take the time with you. And I'm going to start, that consultation, and so is Cindy and everybody else on our team. We're all being trained to work the same way. We want to start with what is that monthly payment that's comfortable for you. That you may qualify for more than what you actually want in a payment. So we need to talk about you and your financial health and what product is going to work. You've got 3% down, but you have a 800 credit score. Well, we're going to talk about maybe a 3% down conventional loan.
Is this going to be a forever home? Do you only plan on being here a couple years? Do you want to pay points? Is it worth it to pay points or not? Because if you're going to not live there a long time,
right,
you don't want to do that.
Right.
And what's your biggest investment that you're ever going to make in your life is your home. So to take an hour out of your time to actually get a full pre-approval done to discuss it with someone, it's important.
Right.
It's very important.
No, absolutely. And, we're going to talk about points. Somebody could be saying right now, what are points? So we're going to talk to you about points and what do they do and what do they mean and how much do they cost you and how much should you have available? How much money are you going to need based on the circumstances that we're discussing? We have a lot of you that are listening to us in other states, not just California, not just Los Angeles County. We have a lot of people in California that are listening to us up north or in the Inland Empire where you've got different loan limits than Los Angeles does. So we need to find out where are you looking, and then we've got to talk about what those loan limits are, and then we have to talk about, okay, well, what does that mean as far as down payment? How much are you going to need? Okay, well, where is it going to come from? Oh, you want to buy a $600,000 property out in Norco? Okay, well, now you're a jumbo loan. Oh no, you can't get a gift for that down payment. There's a lot of things that we have to discuss before we even start a loan application, before you even put your name and your social security number in an app, and before we even pull credit. There's a lot of things that we're going to talk about, and we're going to educate you, and we're going to train you, and we're going to bring you through all of the questions that we need to know. And then by the time we're done with that conversation, then we're going to get you off to the races, and you're going to start your application, and you're going to put all of your information in online, and you're going to upload all of your documents to us. Then from there, we're going to go ahead and we're going to review that loan. And if we feel that everything is there, everything is ready, then we're going to go ahead and get that file submitted and get that pre-approval issued. So much different scenario than many lenders do. I can't even tell you how many times I've had clients call me that are already in escrow and they're just shopping for a rate.
They have no idea what's going on.
They don't have a clue. They don't even know what rate they're shopping for. And then I mentioned, well, your lender has told you, they're already in escrow.
Yeah.
Your lender has told you about closing costs. No, what's that? Okay, so
Yeah.
let's start from the beginning, and by the time that we're done, sometimes, unfortunately, they're backing out of the property because they had no idea.
What are impounds? Why are these so much money? Why are you charging me so much money for impounds? Well, it's your impounds. It's your taxes. It's your insurance. But unless you're trained and explained all this stuff, you have no clue.
Yeah.
I mean, this is our job. That's why we're here to teach you.
Right.
And educate you. So when you hang up the phone, you're going, I feel confident. I feel good. If I have a question, I can call her back, get all my answers.
Right. Absolutely. So that is the difference between us. That is the difference between Mortgage Mom Radio and the way that we work and maybe other lenders. And I'm not saying we're the only ones that work that way. There are a lot of very, very good loan officers and very good banks out there. But there's, unfortunately, just like there's always a lot of good ones, there's a lot of bad ones. So, just make sure that if you're working with somebody and it's not us, that they're educating you, they're explaining things to you, and they're truly getting you prepared. And if they're not, then you need to pick up the phone and you need to call us and you need to ask for Cindy. Get on Cindy's calendar. All you got to do is tell Matt. I'd really like to talk to Cindy.
I'd love to help you.
Yep, she would. All right, so we're going to get into, number one, how do they call us? It's 844-935-3634. Get on the calendar for that consultation. Do not get upset that you have to wait for an appointment, but make the appointment so that you can talk to us and do that consultation. You will feel so much better before you're ready to actually go to the website and do the loan application. So now let's pretend we've gotten through the consultation, we've done the hour, and now they're going to do their application online. So we're going to give you a good idea of the documents that we would need from you as a borrower for that pre-approval. So this is really good for you guys to understand what you need to gather in advance and be prepared to issue. So why don't you go ahead and talk about a wage earner. So wage earner is a W-2 employee that works for somebody. They don't own their own company.
Yep. So it's your typical job. You get a pay stub. You're either paid hourly. You could be paid biweekly. You could be paid monthly. You could have a salary set. Just your typical W-2 job is our wage earner. And when we have a wage earner, we're going to need a pay stub, 1 full month worth, so that way we can document all your earnings, if you had bonuses, commissions, anything like that.
Hey, so all you boys down at the docks in San Pedro, we need 5 because there's a lot of months that have 5 weeks. So 5 pay stubs for you weekly guys. Okay. And girls and gals. Trust me, there's a lot of girls, lots of gals down there at the docks. There are. All right, but 5 for you weekly people.
Very good note.
Yes.
And then we're always going to need 2 years of your W-2s, the most recent years, 2 months bank statements, all pages to them. Never forget. No, don't leave off that last page. We always want all pages. We got to see the whole thing.
Yep. Even if it says this page intentionally left blank, you have to send it.
Or I'll call you and ask you for it.
Right, exactly. And you'll be like, why? I throw that one away. Just for your all records, don't ever throw it away. Because a lot of people, and it's getting better, right? With so many people doing online banking, it is getting easier. It's so helpful to just log in and download that PDF of that statement. But many people still get their statements mailed to them. And they open it up and they do their accounting each month and they throw that page away. And how many times have you run into that in your career?
Oh, so many times. And then before, people would have to go to the bank to get it.
Yep.
Have to walk into the bank and go wait for a teller.
Right. To get the last page of a bank statement that says intentionally left blank.
And we have to have it.
Right. So that, and 2 years federal tax returns, all pages, we do not need that for a wage earner, but we do need it if you own rental property. So that is the only way we're going to be able to, if you're buying your next property or you own rental property, we're going to have to see your rental income from the tax returns. And let's see, is there any other reason why a wage earner would have to give us tax returns? I don't think so.
No, not typically.
Just a rental property. Now, if your husband is self-employed and you're W-2, or vice versa, wife's self-employed and you're W-2, then obviously for your self-employed borrower, we're going to need those 2 years tax returns.
Yeah.
So let's get into self-employed. I'll let you take that one too.
All right. So self-employed, people who own their own companies, their own businesses, you file a Schedule C on your tax return. You've got corporations, you've got all that fun stuff. You're typically self-employed. So we need 2 years federal tax returns, all pages. Once again, all pages.
All pages.
Every single schedule.
You do not have to send us your state return, just the federal return. You know, the one that you owe the lots of money on. That one.
That one.
All the pages. Okay.
So 2 years of those, 2 years of federal tax returns, self-employed
Partnership.
or corporations, 2 years federal tax returns, all pages for those, and K-1s. Self-employed sole proprietorships, 2 years, and all the 1099s. A profit and loss through the end of the most recent month. So throughout the year, if we're in November, I need it from January to November of the current year. And then a balance sheet through the end of the month, most recent month.
Yeah, so there's a lot going on there. So if you are an S Corp or an LLC or you're a C Corp, we do need to have your business returns on top of your personal returns. So we're going to get both. But I don't actually need those for you if you are less than 25% owner of your company. So only send us what you need to. If you don't have to send them because you own 20% or 10%, then you're only going to give us the K1 that you received. But if you are more than 25% owner, and even if you are 25% on the dot, we are going to need those tax returns, those business returns. And I have actually had clients that get upset about that, and they say, I'm only 25% owner, and I don't have copies of those returns. And I said, it doesn't matter. You've got to go get them.
Call your CPA.
That's right. If you'd like to get me the company's CPA's name and phone number, I'd be more than happy to call and request a copy for you.
And the best thing about it is, this all sounds confusing, self-employed, a lot of items, but when we call and do that hour conversation, at that point, we tell you exactly which items you need instead of the whole list.
Absolutely.
It makes it easy for you.
It does. And with a self-employed borrower, to be honest with you, most of them have a very close relationship with their CPAs or with their accountants. And if you want to introduce us, send an email, copy us. We will email them and let them know exactly what we need. Almost every CPA or accountant or tax specialist keep a record of all of the returns that they file for their clients. So it should not be very difficult. A lot of times they can even send us the W-2s from, the wage earner, and then the tax returns for the self-employed, and then the business return and the K-1s. They usually have it all. So it really does make it a little bit easier when you just introduce us if this is too much for you to pull together. Now, maybe you're really great and you've got it all filed and organized and you can just upload it at a drop of a hat. You're just going to pull it right out of that OneDrive file or your Google Drive, your Google Docs, which is fantastic. But if it seems overwhelming to you, like Cindy said, we're going to take you through the consultation first, make sure you know what we need. And if it's just too much, just introduce us and we'll get what we want.
And sometimes your CPA likes it because they know exactly what we want and they understand all the lingo.
Yeah, absolutely. All right. So all borrowers, every borrower that is on the loan, has to provide us with a copy of their driver's license. That is number one. And it does not have to be a driver's license. We are not going to not give you a loan if you don't drive. But we do need to have some sort of identification. So whether it is your state ID, whether it's a passport, is there anything else that qualifies?
ID?
Oh, yeah, military ID and if you have your permanent resident alien card, that is actually acceptable as well. So we have to have some sort of formal identification. So I always put driver's license on there because most people have it.
Have a driver's license.
Most people do. Yes, correct.
But if you don't, there's other means.
Yes, absolutely. It does not mean if you don't drive, you can't buy a house. That's not the truth.
I do know people that don't drive.
Yeah. I mean, I do too. And I don't blame them. I kind of want to get to the point where I don't drive either, but I'm really waiting for those self-driving cars.
Yeah, those would be nice.
Right? I can't wait. I look at YouTube every weekend, and like the first thing I put in there is self-driving car, and I'm just waiting for somebody to come out with like a really good one. Like, no joke, it pulls up, it's like in your driveway, you get in it, you put the address that you want, and you lean back,
Just go.
and it just takes you. I wouldn't care if there was traffic. I wouldn't care where I was going. If I could like literally lean back and just play on my phone, play a game or check emails, or just, that time that is spent in the car on the commute is such a waste. Such a waste.
Imagine how relaxing it would be to get off work, sit in the commute, and actually just get in the car and relax. You might enjoy it then.
You might. And maybe once these self-driving cars are doing really, really great, then maybe it wouldn't be against the law to have a glass of wine on your way home.
A lot of people listen to podcasts while they're driving to work, so you're kind of probably don't want those self-driving cars to come around too soon.
You could still have it on.
Yeah, but you could still have it going. You mean you could be listening to your podcast and checking your phone, and you know what I mean? Yeah, I don't know. Anyway, all right, so here we go. So driver's license, retirement account. So not everybody, many of you have 401ks, IRAs, things of that nature. And we do want to get a copy of that if number one, we need reserves for your loan, which you'll know from the consultation that we did, or number two, if you're going to be pulling money out of one of the retirement accounts for your down payment. So along with that retirement though, what do we need, Cindy?
The terms of withdrawal.
That's right. So we need your terms and conditions of withdrawal. Sometimes it's called the plan summary, and you can get that from your 401k company. So whoever holds the 401k, Fidelity, or whoever your bank might be, if you don't know how to get them, they're typically on their website. You can always give them a call. They'll know exactly what you're asking for when you say that you need the plan summary or the terms and conditions of withdrawal. And it is important for us to see that because we need to know that you do have access to be able to get the money out of that account should you need it for the reserves if required on your file, or for that down payment and closing costs to close on the home. So just keep that in mind. It's not just the quarterly statement, but also those terms and conditions. So I'll let you take the next one.
And then we're going to need, if you own multiple properties, we're going to need documentation on that, such as your mortgage statements, any HOA docs, your insurance, your declarations page, which shows the premium amount on it. Any tax bills that you have, anything else that might be attached to that property that's a hard expense. So,
Yeah,
yeah.
we've got to document it all.
Some people have 2 HOAs, so then you'll need to show each HOA statement to show how much you actually have for an output on that house, what your cost is to own it.
Right. And that's how we figure out your rental income as well. So if you do have additional properties, we're going to figure out what is the rental income that you're earning. So we need to see what you put on the tax returns, and then we need to see what are you paying today. Every single year for somebody that owns a home, you understand that your property taxes change a little, your homeowner's insurance changes a little, just a little bit every year. They just change. They go up a little bit.
Yeah,
they don't usually go down. But they do move a little tiny bit every year. So we're going to take the tax returns, we're going to calculate what your true income was on the property, and then we're going to subtract the actual cost, the carrying costs, and that's how we determine how much rental income that we can actually give to you. If you own a home and you're going to hold on to that property and go buy your next home, so you're going to move on to property number 2, then we still need to get your current mortgage statement, your current taxes, your current insurance, so that we know what your carrying costs are on that home, and then you're going to go out and get us a rental agreement to show us what you're going to rent the property for, so that we can then offset that debt to help you qualify. So it is very, very important that you disclose to us all of the properties that you own. Even if you have land that is paid off free and clear, trust me, we will find it, even if there's no loan on your credit report. And we have to hit you for the property taxes on that. So if you own any real estate whatsoever, you need to provide us with whatever you can, whether it's a property tax bill, if it's a free and clear paid off home, but you've got insurance, which I hope to God you do. You have no idea how many people I know that have free and clear properties with no homeowner's insurance. But it happens all the time. We literally all the time, I will say, I need your insurance. I don't have any.
Well, we're going to get you some.
Well, if it's a home that is free and clear, they can actually write a letter that says, I don't have insurance, and we will accept that. It's one of those things that you own a big asset, and if it burned to the ground, you'd have absolutely nothing to rebuild it. So, yes, we're going to try to get them insurance, try to talk them into that. But if they just won't or can't, that's okay. But we would need to get a letter. So this is where things are going to start to get, we're going to review everything that you provide. And then we're going to go back to you with questions. And we're going to ask you for more information and for more paperwork based on what we see. When we pull your credit report, if we see that you have applied at Nordstrom's, or you've applied at Macy's, or you've applied at the ABC lender down the street for a mortgage, we're going to ask you to write us a letter that tells us whether or not you did or did not open a new account that is or is not new debt, and how much is or is not that new debt, right? So we're going to ask you that. If we see that there's more than one, address on your credit report within the last 24 months, we're going to ask you, what does that address belong to? It's information that we need to know. We need to know where you live today. We need to source all of it. We need the 2-year history. And it's very important for us to know that there's no outstanding debt as we're qualifying you that wasn't on the credit report to begin with. Talk about the bank statements. We're going to look at bank statements, and then what do we see sometimes that we have to go back to someone?
extra large deposits.
Yes. Yes.
You went and got a bonus, or grandma gave you 10 grand because she just loves you last month. Mm-hmm. And there it is. And the bank wants to know, where is this $10,000 coming from? Because you can't keep money in your mattress.
Right. Exactly. Exactly.
So then we have to source it.
The other thing we could see on there could be a recurring bill that is not on
True.
on your credit report. So, if you have child support and you didn't tell us that you have child support, we're going to see it coming out of that bank statement, and we're going to have to hit you for that debt. If you have a payment to the IRS, we're not going to see that on your credit report. That's a new thing that went away like 3-4 years ago, that they were no longer reporting to credit reports for any IRS debt that was owed or any liens that were filed. So when that went away, there was no way for us to see it up front. But when we analyze those bank statements, we're going to see those recurring payments go through, and we're going to have to hit you for that debt.
And the worst thing is, you find your dream house, you get in it. Someone didn't go through all these extra steps with you because maybe they just want to get you in the house. And
Well, they just want to give you that pre-approval letter and get you
they
out
just
there
wanna
looking.
get you. And, you didn't tell them because you forgot about it. You didn't think about it, but you go find your dream house, and then you lose it at the end because those things weren't disclosed. And it happens. It happens.
It does. And we'll find it. If it is there, they're running what's called data verify. So they're somewhat doing a background check that's going to pull anything. Even if if you had a foreclosure or a bankruptcy and you're able to somehow get it removed off of the credit report and you don't disclose to us that you had it, we're going to find it. It's going to be there. It's going to come up, and it can absolutely 100% kill your deal. Not saying that you can't get a loan with a bankruptcy or a foreclosure, but boy, is it easier to know about it up front before we get started and we're going down that road.
Before you find your dream house.
Yes, or you've got alimony or you've got child support, and we find it in the bank statement, and you've been out with this real estate agent for months on end looking for homes, and we didn't ask you for the bank statements. We didn't look through the bank statements before giving you that pre-approval letter. You finally got that offer accepted, and we're working through the loan, and we find it, and we tell you, we're so sorry, but you don't qualify. Your debt ratio is too high. So these are going to be the extra things when we're reviewing the documents that you provide to us, that we're going to then go back to you and ask you, why are we doing that? Well, because the underwriter's going to ask the same questions. So why not just tackle it up front? Why not just make sure that we're getting from you what we need? It just does not make any sense whatsoever to not get that documentation and review it before we're sending somebody off with a pre-approval letter to start looking at homes.
And we've been doing this for so long, we pretty much know what every underwriter wants.
That we do. That we do. Yes, absolutely.
I don't think we miss much anymore. We know what they're going to want.
Yeah. No, I'm going to tell you, actually today I had a very interesting one that I've actually never had to, I've had to ask for it before, but it's not very common. But I have a feeling that this year that it's going to be common. So I have a client who's a nurse. She is an ER nurse, and she works per diem. So she typically works 4 days, contracted 4 days per month. Well, with COVID, she worked a ton of days, ton of overtime last year. So her 2020 W-2 is significantly larger than where her year-to-date pay stubs are now that we're in April of 2021. So I actually asked her beforehand, before even submitting the loan, to please write me a letter that explains I'm a per diem, per diem. These are the days a month that I work. This is my normal typical income. Last year was an anomaly due to COVID. And although that seems crazy that her income was bigger, and I'm asking her to explain why it's bigger, right? It's because they're going to look at it and it's going to look like there's a decline, and then they're going to automatically not want to give the income to qualify. But if I can explain why there's such a sudden change, and we're going up in front of the problem, in front of the issue, and we're explaining, this is what my normal salary is. This is what my normal hours are. You can verify this with my employer. This is what happened last year. This was a weird one. We all lived it, right?
We all lived it.
We all lived it. Then we can actually get around that issue of, hey, you've got more than 20% in declining income. We cannot allow the income. I don't have to do that rule, right?
Right.
So it's very, very important that the way that the loan is structured up front and is submitted to an underwriter, that is how That is how it's the rest of the loan is going to flow from there. It's going to go in documented, going to come out with very few easy conditions. And all we're waiting for is your insurance policy, your appraisal to come through, and we're going to get that loan over to docs. And if we're giving you a pre-approval letter in the same fashion, then you know as you're out there looking at a home with a real estate agent, if you see a home that you love and you write an offer and you get it accepted, you're going to close on that home. There's no ifs, ands, or buts. So very, very important that you guys take the time, do the consultation, do the complete full pre-approval, and everything that we ask you for that you return and we get in your file. Because by the time your file is complete, like I said, why would we not just submit it and take it to the next step?
And by doing it all in the beginning, it takes all the stress first couple days, and then you get to enjoy the rest of the process of buying your home.
Right? You get excited. You start measuring. You want to get in there. Yeah, exactly. I could go on for days. But.
Yeah.
All right. So what do they do if they want to apply for the loan? So right through our website or right through that handy dandy phone app, you guys can apply for the loan. It's pretty simple. So you go to mortgagemomradio.com and there is a big button that says apply online right now. You click on that and it says, start new loan application. You're going to put in your email address and you're going to create a password and you're going to hit apply now. And it's going to take you into the secured online system and you're going to go ahead and do your application there. Once you've completed that application, it is going to, and you'll know because it'll say submit. And you're going to click on it, and it's going to say you submitted. Congratulations, you completed the application. It is not going to pull your credit report immediately. It is not going to give you an automated decision. The decision actually comes down to me, comes down to Cindy, comes down to Heidi, to Carrie, to everybody on the team, right? Heather. That's who it comes down to. So once you hit submit, you're going to receive a second email that's going to say, now we want you to log back in and upload your documentation. Well, what documentation are you going to upload? You're going to upload the documentation that is in the email that either me or Cindy or Carrie or Heather or somebody from the team, Heidi, sent to you. So when we have that hour-long consultation, we are going to send you an email with a link directly to apply so you don't have to go to the website and find the button. We're going to give you the easy link so you guys can just get there. And once you guys, and we're going to give you a tailored list to you. So during that consultation, we're going to ask you, are you a W-2 employee? Are you self-employed? How much did you make last year? What do you think your credit score is? We're going to determine what kind of loan program that we think we're going to put you on. What kind of sales price do you think you need to be in to find the home that you're looking for? Hey, on Redfin and Zillow and Realtor.com, when you've been like window shopping every weekend in love, what is that average price that you seem to think that you're finding things that you like? Oh, it's 600. Oh, it's 700. Oh, it's 400. Oh, so that is going to help us to determine the loan program and then the documentation, because some programs require like a jumbo loan. Even if you are not self-employed, we still need your tax returns. So, it's one of those things that we've got to determine what we need. We're going to send you a very personalized list of documents that we need from you in that email, and you're going to follow the documents in the email and upload to the computer system. So if it's asking you for something that we didn't ask you for, then don't worry about it. Only give us what we ask you for. We're going to review the loan. We're going to reach out. We're going to call you. We're going to ask you questions. We're going to make sure we have what we need. We might send you an email with an additional list of documents that we want. But we will eventually clear out from that automated system, tax returns if you don't need to provide them, or maybe a bank statement if you're a cash out refinance and we don't need it. So we're going to make sure that we get those things cleared out at that point in time. But pretty simple, actually. Have you actually used the online system?
Yeah, I have.
Yeah.
It's very, very simple.
It really is. It's not difficult at all. So that is actually the end of the presentation. So I'm going to have Matt bring us back up to full screen so you can see us and all my chunkiness going on here.
Oh,
and
please.
if you guys are listening Saturday morning or Saturday or weekend, Sunday, whatever, you guys are listening by radio, you guys need to tune in to YouTube and watch us do this. It's truly, we take the sound and it goes to radio and we do it nonstop, and we are doing like there's no break. There's no, oh, I messed up. Wait, Matt, cut. It doesn't happen. We're literally just doing it, and you guys can actually watch us do it. And then that is what we take that sound, and that is what goes out to radio over the weekend. So if you guys have questions and you wanted to ask those, you could put those questions right into the feed. I didn't say that even one time. I can't even believe it. I didn't mean to do that. But you guys can put those questions right into the feed, and we are going to answer those questions for you, whether you can see the answer come up in the feed or whether we actually read it out loud and answer it during the show live. But you guys need to tune in. So go to YouTube, subscribe to the channel, click on that notification bell so you know when we go live, or when we upload workshops that are not part of our weekly show. Like the closing costs, there's going to be 2 of them. There's an FHA and there's a conventional, and it's very, very good to understand what those closing costs are. But I don't know that, is there anything we missed in that? Do you think?
I don't think so. Just to say, the process is so simple. There's all this information, but it all starts with that 1-hour phone call. And then we will have a relationship, and we'll keep everything as simple for you as possible. So that way you enjoy your buying experience. That's the most important part. It's the biggest purchase you ever do.
It is. And you want it to be exciting, right?
Yeah.
You don't want it, you don't want it to be stressful, and you don't want to not understand what's going on, and you don't want to get that phone call when you've already ordered your appraisal and done your physical inspection that, the underwriter just called me and said that they saw a large deposit on your bank statement. Where did that come from? Oh, well, I had $5,000 in the safe at home. I was really worried. I didn't know it was going to go down. Everybody was telling me to close my bank account during COVID. And
and it happened.
It does. And so I pulled some money out and put it in the safe. And then when I knew I was going to buy the house, I put it in the bank. And I get it. Totally. It makes sense, right? I'm not telling you that you're a bad guy, but guess what? I can't use cash.
That's why you have us for your team.
Yes.
Go through it in the beginning. Get it all out of the way. All the frustrations. If you did it, then we get around it before you start falling in love with homes.
Right. Absolutely. So how do you get on Cindy's calendar? Well, you dial 844-935-3634. That's 844-WE-LEND-FOR-YOU. That is LEND and the number 4. So we lend for you, 844. Listen to the podcast if you guys found this educational. Like I said, you've got so many more episodes, so many things that we've talked about in the past that you guys can go back and reference and refer to. So listen to the podcast anywhere you like to listen to podcasts. Matt, I know you're the big podcast guy. You listen to podcasts all the time. What are some of the best outlets to pull us up on? What do you think?
Well, iTunes is obviously the number 1, but you've got your Google Play, Stitcher,
Tune in.
Yeah, TuneIn. Yeah, there's
some new ones too. There's like, I don't know, jelly beans, and I don't know. I don't even know if that is one. I'm just making it up. But it seems like there's like so many of them that are coming out like constantly. We're getting these emails going, you're now on, and it's like, oh, okay.
Maybe you should make jelly beans one.
Right? There you go. There you go. We're gonna make our own podcast station. I don't even know what that'd be called. A streaming service, maybe? Is that what it is?
Yeah.
Yeah. All right. Well, there you go. But anywhere that you like to listen to podcasts, we're on podcasts. Just check us out. It's Mortgage Mom Radio. YouTube, always, you guys can watch all of the past episodes. You can see us doing it live. We started at the very beginning of 2020. So we are now 1 year into doing the show on YouTube every single week, other than the ones that were dark, which is always at a holiday. So you've got a lot of episodes. We had 52 weeks last year. So there were probably... let's say that there were 48 or so episodes that were there from last year. And then we've already done, gosh, we're in April already. Holy cow.
So fast.
We've probably done 10 to 12 episodes probably this year, maybe so far. Plus we've got the Homebuyer Workshop playlist that's going on. Lots and lots of stuff that you guys can tune into and learn. It's all free. It's all educational. We want you guys to call us. We want you to get on the calendar. We want you to have the tools at your fingertips. Text the word MOM to 36260. Get that phone app. It is going to be so important for you. Even somebody thinking about doing a refinance, it's very, very important. That way you can be running the payments and know whether that refinance makes sense or it doesn't. Is it worth my time to even go through this? Is it worth the closing costs to pay them to even get this lower rate? Yeah. How much am I going to save? So there is actually in that calculator, there is a refinance calculator, the same as there is a purchase calculator, and there's an affordability calculator. So it will actually tell you, can you afford the house, how much will you actually qualify for? It's pretty cool. So text the word mom to 36260 to get that app. It's just, I can't even tell you, it's great. And, you know, like I said, give us a call. It's 844-935-3634. I had a scenario that came up today, and this is kind of our time that we just get to lollygag for a couple of minutes and then we're done with the show. But there's one thing that came up today, and it was the first time that I've actually had to use it in, my goodness, probably 3 or 4 months, which is kind of weird because I used to use it all the time. And then I realized that I really haven't talked about it much on the show. So I have a blended rate calculator that I use quite frequently. And so when somebody's actually thinking about doing a refinance and pulling cash out and paying off debt, many times I'll get the question, well, is it worth it? Should I do it? Should I not? Right? And I always tell them, look, the math doesn't lie.
Yeah.
Don't trust me. Don't trust another loan officer. Trust a calculator. The math doesn't lie.
Yeah.
So we have at Mortgage Mom Radio, we all have it. It doesn't matter who you talk to. You can talk to me, talk to Cindy, talk to Heather, talk to Carrie, talk to Heidi. You've got us all, right? But everybody's got the access to the blended rate calculator. So I had a client call and she was, wanting to refinance her house, pull money out so that she can go and she can buy a rental property. And she was thinking about taking a $100,000 line of credit at 4.75% rate. She just literally finished a refinance with another lender about a month or two ago. And she had mentioned at the time to that person, I don't know if it was a man, I don't know if it was a woman.
I'm talking about this.
Yes. And, she mentioned she wanted to do this purchase, and he suggested that after they close on the loan that she go and she get a home equity line of credit. Well, a $100,000 home equity line of credit at 4%, that it is an adjustable rate that could eventually go up as high as 18% as the cap, is probably not something that we want to get into. So I asked her, well, with that second or that equity line, do they also have an option for a fixed rate? And she said, yes, they do. And the rate would be 4.75. So I went right into the blended rate calculator, put in her current loan balance on her current loan with her 2.875 rate, put in her $100,000 at the fixed rate of 4.75, because why would you not take a 0.75% higher interest rate? I think it was actually 4.875. But why would you not take the fixed over the adjustable that could cap out at 18%?
Yeah.
I don't know. Doesn't make any sense. So, and you're going to at least pay some principal with the payment when you make it, so you're paying the balance down a little bit. But anyway, so I take all of that and I put it in the calculator, and she's actually paying a blended rate of 3.375. So I told her, as long as we can do a refinance, pull the cash out, and keep your interest rate at 3.375% or below, you are absolutely in no different scenario, period, end of story, than you are today with the brand new refi you just did and the home equity loan that you're going to do behind it. Not only that, but if we roll it all into one, and then down the road you decided you did want a line of credit or you did want an equity loan, then you would have that open, because it's very difficult to find a lender that's going to do a third.
Oh gosh, never.
It's already difficult right now to find a second, right? It's
Yeah.
fine. Right now it's very difficult to find banks that are willing to go into second position to do that equity line or to do that equity loan. So, if second position's difficult, third position is going to be impossible right
And then
now.
it's one loan.
Right, and it's one loan.
One payment.
Right. One creditor to remember to pay. It's so much simpler if we can do it all. So what I wanted to bring up, though, is the blended rate calculator. It's something I haven't talked about in a really long time, and it is something that is really great. I used to have people do this all the time, and I think it's because I talked about it a lot, and I just haven't in forever. So if you have been thinking about doing a refinance and wanting to pay off debt, and you want to know, so here's where this blended rate calculator comes in great. Right now, interest rates are definitely up a little bit higher than they were 6 weeks ago,
Oh yeah,
right?
just a little.
Yeah, I mean, we've probably maybe
We're still
3/8
good.
to a half a point. I mean, we're still in the low threes. I mean, we're still fantastic, right? But if you do a cash out refinance, that interest rate is a little bit higher than it is on a rate and term. However, when you've got credit card bills that you owe 10 grand, 15 grand, 20 grand, 30 grand, 40 grand, and you've got those at 18%, 22%, 26%, you should see some of them that come in. And we take that interest rate that you just refinanced and you got that 2.5% rate that you are just absolutely just in love with. We're going to take that and we're going to take all the different debts that you have and we're going to put them into this blended rate calculator, and we're going to see, what are you really paying?
Yep.
What are you really paying? And if you're really paying more than what you could if you did a cash out refinance to get all that debt paid off, then that's the direction to go. If you're going to pay more by doing that refinance, then you keep what you've got. So again, the calculator doesn't lie, the math doesn't lie.
Yep.
I just want to throw that out there. I haven't talked about it in a really long time, but we all have access to that blended rate calculator. We can run it, we can send you a copy of it. You can see it, you can decide what you want to do. But I used to tell people all the time, and all of a sudden I'd get an email. Go to the website, hit contact us, go to your phone app, hit email me, type in Debbie@mortgagemomradio.com. That's my email address. Send me an email and say, I would love you to run a blended rate calculator for me. It is very simple. All you need to do is attach every credit card statement or every bill or your hero loan or whatever it is that you might have that's outstanding that you want to put all together in one, and send me a copy of your current mortgage statement. That will allow me to look up your property, see your taxes, figure out what your value is, add up all of the debts that you send me, know, first of all, if it's even a transaction that we can do. Do we have enough equity to pull the money out? And then I can run that calculator, or if I'm too busy, I can send it to Cindy to run that calculator. And we're going to get back to you and show you those results. And then we can talk about or set that consultation up to have that conversation and go through that with you. So I just want to bring it up. I haven't talked about it in a long time.
I was doing them for a long time. I still do them, but
Yeah.
I've done so many of them. I've done one where I saved somebody $4,000 a month. They said, well, but what if I get my credit cards paid off? Then it's now in my mortgage. I said, well, if I'm saving you $4,000 a month, what if you just put $2 extra towards your principal?
Right.
Every month. You're going to get that mortgage paid down, all that stuff faster than you ever will in life. And you're still saving the other $2,000.
And all the interest.
Yeah, and all the interest.
Yeah.
But
Yeah.
you're, put half of it into your mortgage if you want to. The other half, keep.
Yeah.
Keep the savings.
Yeah, absolutely, absolutely. So what do you guys do? How do you get on our calendar? You give us a call. It's 844-935-3634. Talk to Matt, talk to the call service, talk to whoever answers. Sometimes it's Manny. And tell them you'd like Cindy's calendar. Seriously, Cindy's amazing. Everybody on my team is. I've got everybody coming on here. You guys always get to see Heidi. Now you're meeting Tiffany. I'm sorry. Now you're meeting Cindy. Losing all you guys, all you girls. I feel like my dad, Debbie, Matthew, calling us the dogs' names, right? That's who I feel like right now.
That's how many you have to help you.
Right, exactly. So, but no, you guys are meeting Cindy, and you guys are going to meet Carrie soon. You're going to meet Heather soon. You're going to meet Tiffany. We've never had Tiffany on. When we did our Christmas episode, Matt, I don't think Tiffany or Cindy made it to the Christmas episode, right?
No, I don't think so.
Yeah, I think that they were off.
Yeah, me, you, Carrie, Larry, and Manny. Was that it?
I think so.
Oh, not even Larry was.
No, I don't think Larry made it. I think Heidi was on.
Heidi,
Yes.
that was it.
Yes. And what were you going to say when I started making fun of Dad? Because I knew you had something coming.
No, just exactly that. I was just laughing because
Because I couldn't come up with the right word.
I've been through. I've been called all of your names before my own
know the
every
feeling.
time.
and,
Yes,
and the dogs and the cats.
and the dogs and the cats.
Yeah. Well, you are the youngest, so you get treated the worst.
Yeah. Pretty much.
Just kidding. I'm kidding. Tracy's the youngest out of the three of us girls, and then you're the youngest out of dads, right? And Tracy is just the baby. She's always been treated the best. I just got to say that.
The baby always is.
They are. They really are. But see, Matt was different, right? Matt was really like, he's got us as sisters, but because he's our half brother, he's also an only child. And then he did have another half sister, but then lived with my dad, didn't live with his mom, with his sister, didn't live with us, with my,
Sounds like my family too.
So, you really were more of an only child.
Yeah, I'm a youngest, an oldest, a middle, and an only.
My mom had her second kid. She was pregnant at my graduation, my high school graduation.
Oh, wow. Yeah. That's funny. So, and that's your brother or sister? Do you
My
have
brother.
Brother?
Yep. And then I had my son a couple years later, 4 or 5 years later. I got married at 21. I was really young.
Yeah.
But it was great. And I had my first son, so they're like 4 years apart. They're best friends.
Yeah.
Calls him Uncle Cody, and
Yeah, I love it. Well, I was going to say, I know that I'm older than you, but our sons are the same. Well, Manny's actually older because you said your son's 19.
yeah, he'll be 20 this summer.
All right. And he
Crazy.
just turned 20. So, and I had Manny at like 23, 24 because I knew I was a little bit older than you. So, but anyway, so there you go. You guys got a nice, good episode here. Lots of good information. If you had questions, I hope you guys threw them into the feed and we answered them for you. If we didn't answer them for you, go to the website, hit the contact us, go to mortgagemomradio.com, send us an email right from that phone app that you guys downloaded by texting the word mom to 36260. Give us a call. It's 844-935-3634. get on Cindy's calendar. Tell Matt you want to talk to her. She's super cute and she's smart. She's got
Well,
both going on
thanks.
for her. And if you guys are listening on Saturday or Sunday morning on radio, I really do hope that you guys tune in live at 5 Pacific time every Wednesday to our YouTube. So please subscribe to the channel. Turn on that notification bell so you know when we go live and you guys don't miss an episode and you can actually talk with us during the show. We would love to see you there. We hope you all have a good one and we'll be back real soon. Bye-bye.
Bye.